KRN Heat Exchanger and Refrigeration Q2 FY2026 Results Conference Call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touchtone phone. I now hand the conference over to Ms. Hiral Parekh. Thank you, and over to you, ma'am.
Thank you, Uda. Good morning, ladies and gentlemen. On behalf of Dolat Capital, I'm pleased to invite all of you to the Q2 FY26 earnings conference call with the management of KRN Heat Exchanger and Refrigeration Limited. The management is represented by Mr. Santosh Kumar Yadav, Chairman and Managing Director, Mr. Sonu Gupta, Chief Financial Officer, and Mr. Jitendra Sharma, the Company Secretary. Now, without taking much time, I hand over this call to Mr. Santosh Kumar Yadav for the opening remarks, and then we will open the floor to the Q&A. Over to you, Santosh, sir.
Good morning, all. I think open remarks will be by Jitendra. So once we finish, then I will answer for questions.
Thank you, Santosh. Good morning, everyone. I, Jitendra Kumar Sharma, Company Secretary of the company. I am having with our Chairman and Managing Director, Santosh sir, and CFO of the company. I hope you are all doing well. It's truly good to connect with all of you again as we discuss KRN's performance for the second quarter and first half of financial year 26. I want to begin by sincerely thanking each one of you for joining in today. Your time and continued engagement with our story means a lot to us. The first half of this financial year has been a very encouraging period for KRN. We have maintained a strong growth trajectory, executed well our plans, and taken several steps that strengthen our foundation for the years ahead. Starting with our standalone performance, total income for Q2 FY26 stood at rupees 227.22 crore, showing a solid year-on-year growth of 126% compared to rupees 100.48 crore in Q2 last year. EBITDA for the quarter came in at rupees 29.60 crore, up 69% from rupees 17.56 crore, and net profit almost doubled to rupees 23.66 crore from rupees 12.11 crore, a growth of 95%. For the first half financial year 26, standalone total income was rupees 344.35 crore, higher by 73% compared to rupees 199.2 crore in half one financial year 25. EBITDA stood at rupees 49.38 crore, up 43%, and net profit increased by 66% to rupees 39.33 crore. On consolidated basis, total income for Q2 stood at rupees 154.46 crore, growing 67% year-on-year. EBITDA was rupees 30.25 crore, an increase of 67%, and net profit rose to rupees 17.99 crore, up 46% compared to the same quarter last year. For H1 financial year 26, consolidated income was rupees 273.3 crore, up 44% over last year. EBITDA stood at rupees 47.85 crore, up 34%, while net profit was rupees 30.43 crore, higher by 25% compared to the same period in financial year 25. The standalone figures are greater than the consolidated figures due to inter-company sale with our subsidiary company. This growth came on the back of strong execution, better capacity utilization, and sustained customer demand across both domestic and export market. Our export business in particular has seen good contribution this year, with continued strength from markets such as the UAE, the United States, Canada, and Italy. Our Nimrana manufacturing facility continues to ramp up well and has started delivering meaningful efficiency gains. The plant's performance is helping us improve delivery timelines, optimizing cost, and maintain quality standards that KRN is known for. Alongside this financial progress, we have also taken strategic steps that we believe will shape our future growth path. Our subsidiary, KRN HVAC Products Private Limited, has signed a business transfer agreement to acquire the bus air conditioning division of Sphere Refrigeration Systems Private Limited. This is an important step that expand our presence in the automotive HVAC segment and adds new technological capabilities. Additionally, we have recently assigned CRISIL A negative ratings with a stable outlook for our bank facilities. This recognition is a strong validation of our financial discipline, credit strength, and operational consistency. Both these developments are recent, and while they have not contributed to the H1 FY26 performance, they set the stage for the next leg of growth of KRN. Looking ahead, we remain optimistic. The overall HVAC and refrigeration industry continues to strong demand momentum supported by infrastructure expansion, sustainability goals, and energy efficient adoption. With our growing product portfolio, manufacturing strength, and dedicated team, we are confident of maintaining this positive direction in the coming quarters. Before I close, I would like to thank our employees, customers, and partners for their constant support and belief in what we are building. Each achievement is a collective effort, and it is your trust that drives us to do better every quarter. We look forward to another great quarter ahead, and now welcome your question and thoughts. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vivek Patel from FICOM Family Office. Please go ahead. Mr. Patel, are you there?
A very good morning. Am I audible?
Yes.
Yes.
Thank you. Thanks a lot for the opportunity. Please pardon my question, as this is the first time I'm looking at the company. First question was, what percentage of our revenue do we drive from the oil and gas sector? And if you're not doing it at this point in time, do we have plans to enter that segment?
Yes, Mr. Patel. Actually, oil and gas basically use different type of tube textile, like this talent tube type, but we are making only cement tube type. So our scope in oil and gas is limited. Like some refineries, there may be refrigeration cycle or something used. So basically that we are supplying, but main textile use, but this silent tube type. So our scope is limited in particular this industry. However, whatever is need in this industry, we are trying to serving the same.
Okay, understood. And secondly, I just wanted to get your view on heat exchanger segment or sector as a whole, not just fin and tube, but heat exchanger as a whole. What we think is the competitive intensity of this industry when we compare it across size, say for example, intensity in less than 1 ton to 20 tons versus 20 to 100 tons and 100 plus tons, for example. How do you think that intensity is amongst these segments?
Actually, we are not but we believe there is a segment industry-wise, maybe data center cooling or refrigeration side, then automotive side, and then refrigeration, then room air conditioning. So also depends on tonnage. It's linked to room air conditioning. I have less tonnage, and then the commercial side I have a multiple tonnage, including then power plant cooling or maybe thermal cooling and something like that. So it depend on we can say like room air conditioning segment is quite big compared to in term of percentage, but commercial side is less in term of value or maybe in percentage. So mainly we serve in only commercial side, very less in room air conditioning side. But especially now commercial side growth is compared to room air conditioning is quite good. Room AC we believe around 10%, but commercial side around 20 to 25%.
Okay. And other than the HVAC industry, which other sectors do you think they will contribute to our growth over the next 3 to 5 years?
HVAC growth in India because it's linked to like infrastructure, then AI or data center cooling, then automotive, especially bus air conditioning, then train, metro. So it's of course linked, and we believe it will be continue in terms of commercial. It will be continue around 20% at least for next 10 years.
Okay. And just last question, if I can squeeze in about the exports. In the previous call, you had mentioned export target revenue share of 50% in 3 years' time. Just wanted to know what would be your strategy to achieve that export revenue share, and more importantly, what is our right to win in the international segment? Thank you.
Yeah, so internationally, actually requirement compared to India, especially in commercial, is huge, especially in North America and Europe. And earlier we have like limited capacity with less infra. So in a new factory, we try to build good infra in terms of internationally, maybe compared to internationally almost the same. And we have good space now, almost 600,000 square feet. So we build factory, try to achieve like export only. And for that, now we are already started the production. So we are supplying sample and we are receiving some order also. Secondly, we hired team also. So we hired one second level person for export sale only. Still today in Europe also. So now we will be only responsible for export sales. So what we said, in particular heat exchanger segment, fin and tube type, we will achieve 50% in next 3 years.
Thanks a lot for your time, sir. All the very best. Thank you.
Thank you.
Thank you. The next question is from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Yeah, am I audible, sir?
Yes, please continue.
Okay. So just a clarification first up. You just mentioned 20% growth for next 10 years, right? So, I mean, you are talking about industry level or company level?
Industry growth in terms of commercial air conditioning or package air conditioning.
Okay. For that particular segment.
Yeah.
Mm-hmm. Okay. And in any kind of CAGR we're looking at at the company level? I mean, next 3 to 5 years, what sort of CAGR we are looking at?
So of course we have now new capacity. So like new capacity is almost our 6x compared to our before 1 year balance sheet. So this year we are trying to achieve around 20%, and then of course 50%, 80%. So for us, I think it's much bigger compared to industry target.
No, so I missed it. I didn't get it. So this year we are looking at 20%.
For new capacity, we are trying to achieve 20% of capacity utilization what we added.
Okay. For new capacity, we are trying to utilize 20% in the current year.
Yes.
And 50% in FY2027.
Yes, next year. Yes.
Okay. And what is our current capacity utilization?
So we have two factory. One is listed and one is subsidiary. So listed KRN heat exchanger we are almost full, and this new subsidiary this year what we said 20%.
Okay. So the existing one we are almost full utilization level.
Yes.
Okay. And for the new one we are targeting anyways 20% that you mentioned. Yes. And what was the capex that got into this new capacity, which made it 6x for us?
So total is around 350 crore, but from IPO we claimed 241 crore, but balance we have also invested. So it will be maybe by end of this running quarter it will be concluded, but it's tentatively 350 crore.
350 crores. And which month this got commissioned? The 6x capacity?
Oh, it's coming 30 of May this year.
30th of May. Okay, understood. And on the financial front, our gross margin saw a big improvement. So just wanted to understand what led to the improvement and how sustainable we see it.
We said before also, so our gross margin is similar to around 20%, but it's sometimes quarter to quarter it can be changed because we change price in each quarter. So it material up and then we can gain some maybe price or raw material inventory, something like that. But if it's 20% is sustainable.
Okay, so this quarter it was around 32%, right? 32% gross margin.
No, so I'm talking about EBITDA, so that's why gross is similar to yes.
So EBITDA margin, I think this quarter was close to 20%. So that is sustainable.
Yes,
that's what you're mentioning.
Yes.
Okay.
That's my mistake. Gross and EBITDA. Yeah.
So we are talking about EBITDA margin. And just one final thing on this acquisition front, can you throw some light on its, revenue and margin details and how much we had to pay for this acquisition? Yeah.
So what happened is actually now we have earlier we are supplying or now also supplying some of industry for especially in bus air conditioning, and we thought there is a good scope in coming years. So as of now, market is around 1,000 for total bus air conditioning, including conventional and electric bus both. And there is three major player in India, so they are selling almost one competitor you can say 50% and rest up to 25, including export. And if I compare to all three, so we have much backward integration in compared to all of three. So we have new facility, but we don't have technology that time and know-how. So that's why we acquired this company. Basically, they are running by three professionals. Earlier, they are working same industry, and they are running this company since I think 12 years. From now, 12 to 13 years. So now we try to not give some value, but we merge this company in terms of their technology, know-how, and all employ their asset and their stock. We just paid for asset and their technology, and then we merge. But value is not much.
Okay.
But now it will run by this same team only. We already started the production and we build some 10 to 20 members as of now, and the coming year we will achieve good numbers from this business as well.
Okay. So basically what you're trying to say, this acquisition is more from the perspective of technology know-how and team that we are getting through the acquisition. Right now they're not doing much revenue, but next year we are expecting some kind of revenue jump up to happen from this.
Yes. Because industry also, this bus air conditioning growing 20 to 25% per year.
Okay. And next year, how much contribution can come from this acquisition? Any ballpark?
So as per our plan it's around 150 crore we are planning, but as of now, we merge in same what we are told before. So top we are not changing. So it's because backward integration means we will make heat exchanger and then tubing and then our sheet metal part from same facility. So it will be mix.
And the margin profile will be similar, what we are getting at the company?
It is similar to our heat exchanger or slightly up.
Okay. That's very helpful, sir. That would be it from my side. All the way best to you.
Yeah.
Thank you. The next question is from the line of Jayashree Bajaj from Trinetra Asset Managers. Please go ahead.
Hello, sir. First of all, congratulations on the good set of numbers. My question is, in the H1 FY2026, the UAE contributed almost 47% of export revenue, and followed by USA 20% and Canada 18.86%. So, what specific investment is planned for the North American market, considering its strong contribution to sustain the growth momentum beyond Asia? That's my question.
So actually, when we started export, also we started to UAE first. So they are we have customers. So same customer, their buying is increasing. So that's why its percentage increasing. But now we are more focusing on especially for Europe and North America. So now whatever growth we will receive from North America and Europe only. UAE, I think it will remain same, but in terms of percentage, it will be down. Once number will increase from North America and Europe.
Okay. And Can you elaborate on your R&D initiatives and the role of Thermotech Research Laboratory subsidiary?
Yeah. So since like last year and before, I think from now, I think 1 year. So we have new companies, 100% subsidiary of our listed companies, Thermotech Research Laboratory. So try to make like as a separate entity and third party lab. So it's almost now ready. So hopefully next month it will start from like in terms of testing. Installation almost completed. Now some fine tuning is going on. So once it will start, so we will test our existing heat exchanger, and now we are sending PPT to our existing customer and new customer, because if they need some value engineering or value addition on existing product, or if they want to some new product development, so that we will help to develop together. Because earlier we can like give simulation by software only, or customer have to test. But customer already have some new development in pipeline, so it will be delay much less compared to our expectation. Or sometimes they can take heat exchanger from our competitor. So to make the plan is particularly that thing, we added new geometry. Now we have almost 20 geometry in terms of fin and tube heat exchanger, and then we have laboratory. So now we can offer to our customer ki you just come to us and we can design, we can test, and then we can supply our product.
Okay. Got it. Thank you.
Thank you. The next question is from the line of Hardik Gandhi from HPMG Shares. Please go ahead.
Hello, sir. Am I audible?
Yes.
Yeah. So congratulations on a good set of numbers. Just wanted to know that are all phases operational in the new subsidiary?
Sorry, can you?
So are all phases operational in the new subsidiary? I think we had multiple phases in the new plant. So are they all operational?
Yes. Now, bus air conditioning, you can say we are trying to add some new assembly line, because earlier they have some conventional or small lines. So this line we will try to set up by end of December or early January. Rest other components already we started the production and we started the supply to our customer. However, now we are adding new customer as well as some supplying to new sample to additional OEMs for all new components. Yeah.
Understood. So, and what was the reason for intercompany sales? Because I saw that although the standalone numbers top line was way higher than the console numbers. So
yes.
Can you help explain?
Yeah, actually what happened because as per our earlier plan, we have to start this new subsidiary before 2-3 months. When we started before May. So especially for imported raw material, like especially for copper and aluminum, we have to give plans to our vendors almost 6 months or 4 months before. So based on our plan, we already ordered to them, and they have to open our new company vendor code, and sometime like in existing we are receiving open account is OA. So they can have sign-us or maybe insurance backside, especially for China and then Vietnam factory. So especially new factory, they not open the vendor code. So that's why we decided we can buy material in KRN heat exchanger. So once we receive the material, and then once we started, we shift this material to new entity. So that is the reason mainly.
Understood. So going forward, I'm assuming this will not be the trend.
And now this not much for sure, but particular this quarter and next quarter, some small number will be there, because some is still not open. So some material we are buying in KRN heat exchanger, and we will to KRN HSE. But by end of this year, it will finish, and from next year almost it will be zero.
Understood, sir. Understood. And are we already experiencing the additional margin from the PLI scheme as well as the state government scheme which we were benefiting from, or they are yet to kick in for the new subsidiary?
No. So for new subsidiary, we as of now we are not receiving any incentive scheme. So PLI, what they have rule, eligibility criteria, we will receive in next year only, because we entered in mid of the scheme. So what top line they are asking, if we will not achieve, then for sure we will achieve in next year. So we assuming PLI we will benefit, we will receive next year for sure. And RIPS we already applied, so hopefully next 4 to 6 weeks we will have approval. So once we will have approval, so that day it will start. So still RIPS also not started and PLI also not.
Understood. And just on the ramping up side, are we, given that such big expansion we have done, are we seeing any big player entering our segment? Or second is, are we seeing the future, are we very positive about our future demand, at least for the new capacity, at least in the next 2 to 3 years?
So you can see in new segment, like we added multiple part numbers. So I can maybe explain one by one. So particularly fin and tube heat exchangers. So for sure we are seeing the growth is export and domestic as well. So just for example, data center like this Google, they announced almost 80,000 crore investment in Visakhapatnam for data center cooling. So we are assuming almost 1,000 to 500 crore value heat exchanger we use on particular this project only. And as of now, what capacity we have, so we are expecting at least 50% we will receive. So like this, all segment growth is there. So we're expecting almost 20 to 25% growth from existing OEMs for India market. And additionally, we are adding new customer from especially for export for North America and Europe side. About refrigerator, because this is no new product for us, all three. So we already started supplying for small OEMs, or like also we approved by Havells recently, because Havells also going to start production for their refrigerator factory near to us from January next year. So we already approved by Havells. So parallelly we are trying to other OEMs also. So it will for sure will ramp up. And then other than this, bus air conditioning we recently added. So mass production we already started, not in big numbers, but from January there will be big numbers. For next year for sure we are expecting good numbers, because we already have experienced team, and even sales we have as of now almost 15 people for bus air conditioning business only. Other than this bar and plate, so we already supplied these small numbers to Indian Railway, and by March we will complete our prototype. Like 6 months we will achieve, and then after 6 months we will enter in tendering for at least 20% of feasibility criteria. And then parallelly we almost develop, I think, 35 customers. We already signed the NDA for bar and plate business. So this business also will ramp up in next year for sure.
Understood. Thank you so much. Just a small last question from my end. I think for the copper bought out parts as well as on the imports, we were looking to source them locally from the new, I think so, 2 new vendors were there domestically who started production. So are we going to do that and reduce our working capital days for the inventory, or we are still going to import only?
As of now, we are 100% importing. So because industry like quality-wise or supply-wise or price-wise, we still have to settle. So of course, we ask some for sample. So as per my personal opinion, it will take at least another 6 months to settle down on the things, because Hindalco is still not started. And Mattube and Adani have joint venture, so Adani industry also not started, only Mattube started. So they are mainly, as of now, they are supplying plain copper tubes, while IGT also they are trying to supply in less numbers. So once they will settle, so for sure we will ask them for sample and then approval and then mass production.
Understood. Thank you so much, sir. All the very best for the future.
Thank you.
Thank you. The next question is from the line of Shubham from RV Investments. Please go ahead.
Hi, sir. Am I audible?
Yes.
So, sir, as you said that we have expanded our capacity 6 times.
Sure. Can you speak loudly? Yes.
Hello, am I audible now?
Yes, perfect.
As you said that we have extended our capacity 6 times, so can you give some guidance in terms of revenue for the coming years?
Actually, that question, Shubhamji, we receive on multiple calls, but the exact number we cannot share on, of course. So, but it's in terms of capacity, I think you can calculate by yourself. It will be better.
Okay, and can I know the current capacity of both the plants of the main company and the subsidiary?
So main facility, our capacity compared to, if you see our last budget is almost full. and the new capacity what we added. So this year we are trying to
Sir,
achieve
I'm
around
not asking
50%.
about utilization. I'm asking about the manufacturing capacity in terms of volume.
No, actually, heat exchanger, because so there is two type of capacity you can say. One is in numbers. Second is in terms of maybe usage of the tonnage of the material. Because we make heat exchanger like a small one, maybe 200 rupees one heat exchanger, and other side almost 20 lakh of one heat exchanger. So that's why it's better to maybe better to maybe calculate in terms of tonnage. So that numbers I don't have in front of me. So maybe we can send you after call.
Okay, sir. Thank you.
Yeah.
Thank you. The next question is from the line of Mohit Chugh from Shubh Lab Research. Please go ahead.
Hi, sir. Mr. Yadav, greetings. This is Prateek this side from Shubh Lab Research. I hope I'm audible.
Yes, Prateek, you're audible.
Mr. Yadav, so my first question is, on the ramp-up side of the new facility. We had this question last quarter also, where probably we have been guiding about 20% capacity utilization of the new plant itself in FY26, this current financial year. So, Mr. Yadav, I know you don't give guidance, but if I do a rough math of around 1800 crore revenue potential from the new capacity, which leads to around 350 crore revenue from the new facility in FY26 itself. And the existing facility already generating around 450 crore. So is it fair to assume that FY26 will be a year of around 750 to 800 crore revenue for our company?
Again, actually, numbers I can't comment much actually. So for that, honestly, this is the legal point, so I can't comment much. But capacity-wise and utilization-wise, I think answered.
Right. No, Mr. You have certainly answered about it, but I'm sorry to press again on it, because if we see the newer capacity, which is probably 6x of the last capacity, and at a time when last capacity was 300 crore. We were generating around 300 crore from the older capacity. So from there itself, I am, trying to infer that what will be the ramp-up potential for the new capacity in FY26. So sorry to press again on it, but that's how I was calculating it. But fair enough.
So I think we are maybe similar thought. So what I said, new capacity we are trying to achieve 20% this year and 50% of capacity utilization next year.
Understood. No, this is helpful. Probably we'll reach out after the call to the team. Secondly, if my question is on the standalone versus console number, I think it has been asked earlier also, but I have a follow-up on the question that our consolidated revenue is lower than the standalone revenue. So is it fair to assume, Gupta ji, that the subsidiary sale this quarter was very low? That is why the purchase which subsidiary has done from the parent company has been cancelling out, and yet the console numbers are lower than the standalone numbers.
It's the same, because mother company have raw material, so he's sold to a subsidiary, and subsidiary have of course revenue less, but once we console, then we have to reduce intercompany billing by auditor.
Okay. It means probably subsidiary has bought raw material from the parent company, but subsidiary has not done material sales, and that is why net revenue is coming down.
Yes.
Understood, Mr. Yadav. Very helpful. My last question, Mr. Yadav, is on the recent acquisition which we have done. So, I just wanted to understand, because if we look at the company's website and, try to understand what the company has done so far in its history of existence, it seems that the revenue of that company is not material. So, first of all, is that assumption fair? And then secondly, how much revenue potential do you see given the technology we are buying from the company? And will it give us an entry to railway coaches, passenger coaches segment also from this acquisition, if it materializes further?
So I think I'm not clearly here, but however I try to reply. Once it's not complete, then I can reply again. So this company actually, this promoter, I think they left. There is the Sparrows Motherson. They work with Sparrows Motherson. So the two guys within sales and one guy in operations. So they came out and they founded two companies. One is Spare Thermal Refrigeration and one is Spare Refrigeration System Private Limited. So main company was Spare Thermal System Private Limited. So they started and I think they achieved maybe top line, I think maximum, I think 40 or 50 crore only. But they are unable to convert this business because of lack of working capital. And then this, before 6 to 7 months, this company, they sold to another guy because now to enter in railway business, complete railway HVAC, somebody want to enter new, so he had need some experience, especially for cab air conditioning, or maybe if he have some bus air conditioning, then also he can enter. So one company bought that company complete for this system, this spare system refrigeration thermal private limited. And then they promoter three, they buy back bus air conditioning from their old company to this spare refrigeration. So actually we bought spare refrigeration, bus air conditioning business, but this company, I think revenue is not much. I think their top line is only 2-3 crore. So now our target is, because we have backward integration in terms of in all competitor, we are now the maybe number one, and we see market is good, and we have expertise, especially in heat exchanger, tubing, sheet metal, and then of course they have technology to both convention and electricity. And market is growing at least 20 to 25%. Third, we will enter in HVAC system for complete railway towards this business. So once we have 500 bus AC experience, then we can apply for railway complete HVAC system. And this thing happening without any big investment for this business. So we have already like facility, backwardly including like space. So you can say with very less investment, we added this business, and of course this will come as a complete our product. So first bus air conditioning, and then this battery management system, and then railway air conditioning for railway and then metro.
Understood, Mr. Yadav. So it is fair to conclude that revenues from this acquired company is not very high, as you said, because of working capital constraints it has in the past. But probably technology which we are getting is the value here in this acquisition.
Yes, because this bus air conditioning business is like a little tricky because you have to complete pan-India based service, and you have to knowledge about like dealer base or maybe bodybuilder knowledge key. So that is a little tricky. So that's why we need the experienced person and team who can handle this complete entire ecosystem.
Understood. Fair enough, Mr. Yadav. No. In fact, congratulations for this. This seems like a very meritful forward integration of the business at such an early stage. So congratulations on that, and good numbers, Mr. Yadav. Thanks a lot.
Thank you, sir. Thank you.
Thank you. The next question is from the line of Shiv Kumar Prajapati from Ambit Investment. Please go ahead.
Yeah. Hi, sir. First of all, congratulations on great set of numbers. My first question is, did we book any inventory loss or inventory gain during this quarter? And if you can help me understand, if suppose we take 20% EBITDA margin as a median, so would you be able to share the split between the products offering higher margin than 20% and products offering lower than 20% kind of margin?
So I think we not calculated that way. Actually, we change price each quarter. So like mainly 4 times in a year. But however, once like market trend is upper side, then of course gain is there always. Okay. But I think what we promise and what we are trying to say, what EBITDA is around 20% is I think sustainable for us, and especially in next year once we will have incentive from RIPS and then PLI, and then of course in new facility we will have this income tax also 15%. So of course PAT will be we can improve with adding the incentives, and PAT we can maybe with income tax, so it both will improve from new facility.
So will you be able to share the breakup of other expenses?
We can share, so maybe after call, you just maybe write down your mail ID, so we'll try to share.
Sure, sir, sure. And sir, in this quarter, I came to the point that you have mentioned the 26 crores was still unutilized towards the project, whereas the proceeds from IPO has already been utilized. So can you explain where did we utilize this extra fund? And
So mainly this what we not utilize, so down payment. Actually, what machine we bought especially for import and domestic. So some vendor have 10% balance or some have 20%, because once machine perfectly run and everything certification installation or running certification signed by our team, then we will pay. So that is our agreed term with the vendors, and some I think is still pending on solar side and office, I think. So this is only that.
understood, sir. And sir, what would be our outstanding order book, and how many new clients, or say how many new clients we added during the quarter, and did we enter any new geography, or are we planning to enter some new geography?
Geography, I think same, still same. Of course, North America, Europe, and UAE, and of course, I think Sri Lanka we added recently last quarter. So we already started supply some of container. And about new customer, I think because now we have multiple products. So I think in last quarter I don't have exact number, but as per my opinion, I think we added at least 40 to 50 customers. That is in compared to all components.
Okay, understood. And what is the outstanding order book right now?
So order book, actually, I said always in all call, because we don't have projects order actually. So it's the rolling actually. Yeah.
Understood. Understood. And sir, UAE forms our major portion of export. So what is driving growth in UAE? I mean, which segment of
Actually, UAE, my customer is same, but their requirement is increasing. So that's why his number is increasing. But we know that if some new customer is only old customer only.
Understood, sir. Understood. And sir, now we are present in most of the heat exchangers. So can you explain can you explain the margin profile of these kind of heat exchangers? Like Fin and Tube, we are already in. If you can speak more of roll bond or the bar and plate heat exchangers. So what sort of margins does these products offer?
So refrigerant side like roll bond and frost free and WOT condenser, of course, margin is slightly thin compared to our existing because of big commodity and numbers are big. But the bar and plate and bus air conditioning, this both business margins are good compared to our fin and tubes.
Okay.
Higher side. Yeah.
Yeah. And sir, maybe my last question. So it's from the annual report. So just went through it and I saw that the freight and carriage inward as a percentage of other expenses, it was around 22% for FY25, whereas for FY24 it was close to about 14%. So there was a sharp jump in this freight and carriage inward. I understand that most of our raw material are imported, but still it's a big delta between these 2 years. So can you explain the difference? Why?
So I don't have exact reason, but what I remember, I think freight cost almost maybe change to almost 2 times compared to both year. However, we can maybe find the exact reason for both year, and maybe we can share.
Sure, sir. Thank you so much.
Thank you. The next question is on the line of Ajay from Niveshaay. Please go ahead.
Congratulations, sir. Encouraging to see the new facility getting ramped up. Sir, my question is the higher offtake mainly increased volume from existing customers, or are we successfully penetrating newer markets or securing new customer addition? And is it the growth is being driven by traditional applications of these products the HVAC, or in the new emerging high growth sectors like data center, where you mentioned maybe India has announced a significant size of opportunity. So is it like the newer growth is being driven by these high growth areas? And on that data center comment which you made, like 50,000 crore opportunity. So what would be the addressable market for KRN? Uh, and what sort of market share are we targeting to serve that market?
So actually, heat exchanger, of course, our existing customer, their buying is increasing, their demand is increasing, and we are also adding a new customer. And then revenue we receive from existing as well as new component as well. So especially for this refrigerator, and then some bar and plate, and then bus air conditioning, and then some tubing side. So if it close, then we can say we increase. Secondly, of course, we are trying to achieve all industry our revenue, especially data center. Of course, because their growth is quite good. So we have already customer, and what we don't have, so we are trying to take in board also for these customers. And second, third one, what you said, especially for this Visakhapatnam project. So as per my opinion, detection requirement will be, I think, 1,500 crore for this project, and we are expecting at least 50% of order to us, because especially data center cooling requirement is a big heat exchanger, and we can say proudly, as of now, we have only such facility to make big heat exchanger with good infra. So we have capability, capacity, and space.
Sir, so on the data center side, is there any technological advantage that we have, or any moat that we have, which maybe that allows us to maybe forecast such a higher market share in the market? So if you can comment on that, any technological difference which we have between maybe a normal HVAC or industrial system and for the data center system, is there any technological difference?
So actually, I cannot say directly technology difference, because these design maybe do by OEMs only. So, but now we have our design center also, our lab. So if customer want to, then we can help them to design, or maybe we can help to test them quickly, so they can save their time. But of course, I cannot say due to this they cannot buy, but especially because if you need numbers big, so you must be capable to make in terms of capacity, in terms of infra, because to make big coils you need a good space with overhead cranes, you need multiple stations in terms of space and then capability. So that we have now. If I say earlier, of course we will also don't have earlier, because of space constraint, and not invested in much in machinery, but now we invested based on these, especially for big heat exchangers. So that's why I'm saying we are expecting at least we can get 50% by default.
Got it. And sir, because we project the facility to ramp up, so maybe if you can, going forward and maybe next 1-2 years, how is the mix that we are seeing, between cement tube and the bar and plate, and then the bus HVAC? So, if any sort of mix which you can maybe provide, because margins are higher on the bar and plate and the bus air conditioning. So, what sort of mix should we envisage going forward?
So I said before also. So now we are try to achieve or expecting 12% of PAT, but from new facility, because we have in terms of capacity, in terms of incentive like PLI, then REITs and electricity sharing and new income tax scheme. So if I club all at least for 2 or 3 years, so we can have much data. But what we are saying to market, we can try to improve at least 1 or 1.5% of that. Because other side our depreciation and then this overheads will increase.
No, sir. My question was on the product mix, going currently, because we have the sheet metal, evaporator coil, condenser coil. So these are existing products, and then we have the newer products like bar and plate, where we already got the approvals, and then we expect ramp up in this like Q4. So going forward in 1-2 years, I wanted to know how are we projecting the revenue mix of the company in terms of the existing product category, the newer products like bar and plate, and the acquisition like for bus HVAC, which we have recently done. So any sort of product mix which you can share. And when the
So revenue, I got your
up,
question. Yeah, I got your question. So actually revenue-wise, we not defined product-wise. However, because we have like mix also inside between, because bus air conditioning like sheet metal also we will make in-house, then tubing also we will make in-house, then heat exchanger also we make in-house. So this is the like mix we have to sell inside also. So what we try to say, we will achieve total plant capacity 50%, including all components, including our existing as well as new. However, if you need like segment wise, so we can make the paper and we can share.
Got it. And sir, just one question on, because we have, like even in previous calls we have mentioned for a healthy EBITDA margins, but previously because China had removed the export duty on Chinese exports for aluminium and copper coils. So just wanted to know some more thoughts on how do you plan to manage these raw material fluctuations, because even recently there has been some increase in the metal prices. So what sort of confidence do you get to maintain a 20% EBITDA margin? Because even in last 1-2 quarters, maybe because when our utilization was low and the industry was maybe suffering, we had suffered from margins. So I wanted to know more from you, what gives us this confidence on the margin guidance. Yeah.
No, actually material risk is not our side. So of course impact can be quarter to quarter because if suddenly jump or maybe some impact from duty side or maybe some anti-dumping duty side. So we cannot pass to our customer immediately, but however next quarter we always pass and customer also always agree. So what your difference seen, especially in EBITDA 2 or 3% up and down, so it's because of this only. Because sometimes we can gain inventory margins or what we have impact, then we can pass to our customer next quarter. So we will you can say 1 quarter to next quarter. So that's why this slightly fluctuation there. But risk is not our side. We just always pass to our customer.
Got it. And sir, just one bookkeeping. So because it has been asked the standalone revenue is higher than the console. So is it for some sort of a backward integration where the standalone entity is acting as manufacturer for the subsidiary or maybe sheet metal? Is it something like that, or it's just that we have just transferred the material as in how it is received on whatever the cost? And that is why, because in the standalone the margins are just lower compared to the consolidated margin. So is this some sort of backward integration, or is it
this
just
quarter mainly from raw material only, but what you said backward integration also, because in new facility we are making U bands and then sheet metal and manifold also. So these component of course we will buy to this holding company also, but it will be not much compared to what we will this quarter, because it's quite high number, because we have all raw material we bought in our holding company and we ship to this subsidiary.
Understood, sir. All the very best for future.
Thank you, sir.
Thank you. The next question is from the line of Yogesh Patil from Dolat Capital. Please go ahead.
Sir, am I audible?
Yes.
Yeah. Thanks for taking my question and congratulations for the good set of numbers. Sir, in this quarter Q2 FY2026, we have reported a consolidated revenue of 150 crore approximately. How much was it from the new facility? Any idea in ballpark numbers if you could give?
I think it's around 33 crore.
Okay. And what was the EBITDA contribution from the new facility during the quarter? Any?
EBITDA, I don't have number, but of course we will. I think around we did minus. I think around 4 CR because interest and then depreciation. So, but EBITDA margin I have to check.
Yeah, no worries, no worries.
Yes.
No worries. Sir, on a capital expenditure side, can you help us to brief the capital expenditure in terms of what is the nature of the capex? How much of the IPO proceeds are pending for the deployment? And what can we expect going forward for FY26 and FY27? So in the second half of FY26, what amount of capex one can assume, and in FY27?
So actually that is still under consideration. So I can't describe now. However, what we I think already did or somewhat is spending around 25-30 crore. So it's tentatively around 350 crore in new this capex. So I think 25 crore is still pending. We have to invest or we have to pay to our vendors. And about next year and next to next year, we have some plans in pipeline. So, but once free, then we will let you know. So it may be in another, we need 4 to 5 weeks.
Sure, sir. Thanks a lot for taking my question. Best of luck.
Thank you.
Thank you. The next question is from the line of Heta from Monarch AIS. Please go ahead.
Yes. Hi, sir. I had two questions. One is regarding the solar investments that we were, planning to take up in KRN HVAC. So, by when would that be operational, and what would be the cost advantage we would have because of that?
So solar, actually, there is two types. One is the what we are making, we are directly using. So we can, I think, now manufacturing, I don't know what is the name. And second is the on-grid system. So there is two segments. So one is already started. Second is under installation with government because we have to contact with grid and then transmission and then supply chain completely. So I think it will start maybe next 2 weeks. 2 weeks for both. So then we will have at least benefit in terms of our existing, I think around 0.5% of saving, we can say, maybe in terms of revenue.
Okay. And so just wanted to understand how would the working capital now shape up going forward? Do we plan to keep higher inventory levels?
So actually, what happened, because now we added new components, especially for refrigeration, then bar and plate, and then bus air bending. So that's why we have to keep some minimum level of stock. So that's why now it's increased. But going forward, it will settle down because now we have already started the SAP, so we can monitor it smoothly. Secondly, this Make in India copper tube and aluminum foil start, so then also we can control something. So maybe in this quarter, it will maybe same or slightly up, but from next quarter, it will be try to control.
Okay. All right, sir. That's it from my end. Thank you so much.
Thank you. We will take that as our last question for today. I now hand the conference over to the management for closing comments.
Hello. Yeah. So thanks to attending calls, and still what is the guideline is still remains same, and we really appreciate our team efforts and then our stakeholder supports. So thanks from our side, and we appreciate for attending the call.
On behalf of Dolat Capital Markets Private Limited, that concludes this conference. Thank you for